Back with another dose of economic reality. Absolutely. So we got a lot to talk about today, folks. Think about what's happening now. We've got another crypto exchange basically under fire for fraud. And this one's a big one. This is Binance, right? So is Binance going to survive this? Is Coinbase going to survive, right? A lot of these people, I invested in the space as well. But a lot of people, that was their hope, was get away from the dollar and get into cryptos. But now what's going to happen if the exchanges are taken down, taken over, taken down, fined into oblivion? Think FTX times 100 when you have Coinbase and Binance. I'm not sure the exact size of how much bigger they are, but these are big places where people hold a lot of their digital money. And it's really getting harder to find a safe place. That's why I've always advocated here for hard assets. If you hold it, you own it. You don't have to worry about third party or counterparty risk because you have it, right? So somebody could break into your house, obviously. But we're going to talk about that, what's happening with Binance. And we're going to talk about the markets and a lot more. First, people that say I never have good news, you're wrong. Check this out. I got me some zombie cereal today for $1.99. Zombie cereal, non-GMO. What other good stuff do we have here? Vegan, gluten-free, zombie cereal. So after I eat it, if I turn blue, start foaming at the mouth, I'll let you know. But yeah, you can find good deals out there still, even with the rising cost and inflation. That was a discount retail store called GTM that I like to frequent. You never know what you're going to find there. And actually, I'm going to scan the barcode on the top and see what kind of free game I can get into. All right. Thought I would just try to bring a little good news. Right? It's harder to find good news, right? When I'm holding up a box of cereal, I'm having a difficult time finding good news in all this mess. Well, I guess there is good news that people are realizing what's happening here with the financial system, with the economy. People are now waking up, finding out that the banks are insolvent, that the banks don't have the money that people put in there. So I guess that's a good thing if you can say, people are realizing what's happening now or becoming aware of what's happening. That's a good thing. But let's talk about a few things here. And I want to get into what's happening with Binance and a few other things here. But as far as people doing good, having a lot of money, here is an example of how looks can be deceiving, right? So we know that rappers, I'm talking about the music, rap, hip-hop, rap, rappers like to show off. They wear gold chains. They like to show off all their cars. And some rappers have a lot of money. But here's a rapper here called 6ix9ine. It was discovered there after some lawsuit came out that he had owed $120,000 in credit card bills. And this is a very well-known person. I couldn't tell you one of his songs, but he's big in the hip-hop world, right? So there you go. I mean, in his videos, he looks rich. The way he dresses, he looks like, I don't know, he's got tattoos all over. But anyways, $120,000 in credit card debt. So someone that's a successful rapper, successful musician, has that much credit card debt. So are they successful? Well, they're well known. And I guess he's kind of famous because he's in the news on hiphopdx.com. Sorry. I'm not up on music like I used to, but that's just an example of how people like to front. They put up a front that they're doing really well, right? And I think a lot of people are the same way. You see people buying things, driving newer cars, and you think, wow, they're doing well, they're successful. So much is based off of debt. Now, I'm not sure how this rapper put his albums out, if the label paid for it or what, or if he had to pay for it himself. Maybe that's how he ran up all that credit card debt. And maybe he'll get more streams now, and maybe he'll pay off that debt. But I kind of doubt it. That's a lot of debt. All right, but let's get into some other news here. Several institutions, several news outlets are talking about a credit crunch. And what that is, that's the theory that with the banks being under the gun right now, under the microscope, banks failing, that they're going to really restrict or make it harder to get loans. Now, we already have higher interest rates. So that makes it hard enough. We already have people under record amounts of debt. Between 60 and 70% of people are in record amount of debt right now, meaning the most debt they've ever been in their life. So we've got those things actually making it more difficult to qualify for loans. But tightening credit, that means it's going to be harder for people to get loans, and prices are still too high for the things that people need to finance: homes, automobiles. So a combination of all those things, and then on top of all that, the tightening credit, it's going to make things drop in price very significantly if that happens. But is that going to happen? Well, here's what could happen. The Fed could come in and just backstop all these banks, and therefore the lending will get even looser lending. And instead of tightening, it's going to be loosening, and it'll be easier to get loans. Just think subprime to infinity, because the Fed can just come in and say, well, we're going to back every loan now. I don't think they're going to do that. I hope they don't do that, but I'm saying that's a possibility, right? So anyone's saying that there's definitely going to be a collapsing cost of living or deflation or falling prices because of tightening credit, a lot of people losing their homes, a lot of people losing their cars, because when prices come down, people are underwater. People then are more likely to, here's my keys, sorry, thank you, bank. Keys to the car, keys to the house, both. People are more likely to just let it go if you see a collapse in prices. When prices go up, on the other hand, people tend to stay put. For example, right now we have people that got into their homes with very low mortgage rates. Right? A lot of people refinanced. I think it was more than half, just in the past 3 years, more than half of homeowners refinanced at a lower rate. Or people, not just homeowners, but homeowners with mortgages. And these people are more likely to stay put for now, because prices haven't really dropped that much. We're down year over year slightly in the housing market, but not down enough where people are actually panicking yet and just willing to give up the keys and let it go. Right. So that could happen, right, folks? So anyone telling you exactly what's going to happen, I don't think they really know all the possibilities. No one knows all the possibilities. What I've always said here is prepare for both. Prepare for prices to go up. Have some assets that are going to inflate with overall inflation. Some people say that's crypto, and maybe it is, but how much is the crypto going to be worth if the exchanges are taken over? Let's talk about what happened to Binance, right? And I told everybody here that this could happen. Regulators going after these exchanges. U.S. regulator goes after Binance in newest crypto clash. The CFTC accuses world's largest crypto exchange of selling digital assets to U.S. customers despite not being registered to do so, right? So they're basically putting these digital currencies, these digital assets in the category of real assets. Therefore, they need to have all the proper licenses, security licenses. Commodities and Futures Trading Commission sued crypto exchange Binance and the CEO for selling derivatives backed by digital assets to U.S. customers despite not being registered to do so. The suit filed since 2019, Binance has solicited and accepted orders to operate a facility for trading products such as futures and options that derive their value from cryptocurrencies. So just like they do with other commodities, right? There's all these paper forms of trading real items like gold, silver, even foods. Wheat, for example, can be traded on the papers market. But see, when these crypto companies go to do it, they're going after them, right? And they could come up with something else too and come after Coinbase. They could come up with anything. So basically they can shut these places down anytime they want. So are you safe as an investor holding items on these exchanges? Maybe, and maybe you'll walk through the minefield and you won't get blown up and you'll come out a big winner on the other end with a big handful of cash. But it's going to be walking through a minefield, because which exchanges are going to survive? And if confidence is lost, how much are these digital assets, what they're calling it, how much are they going to be worth, right? So it's pretty scary out there trying to find a safe place to invest and to keep up with this rising cost of living. All right, on to some other news. Burger King, 26 Burger Kings are closing in the Metro Detroit area, 26. And, we told you this was going to happen in areas where there may be a lot of crime or areas that are lower income. this is where it starts, but this is going to spread all across the country as this financial crisis 2.0, economic collapse / Great Depression, which I think ultimately we're going into a Great Depression 2.0. This is going to expand, right? So it starts in the cities, and we talked a few weeks ago about how several, and I think all of the Walmarts in Portland were closing down. I think it was like 3, but it was all the Walmarts in the city of Portland. So crime, more people taking things because of the cost of living. Of course, in that article, they blamed self-checkout as the reason. So if self-checkout was the reason, why don't just go back to regular checkouts, right? So obviously it wasn't just self-checkouts. If self-checkouts was the reason, close down the self-checkouts, bring back traditional cashiers in lines with a conveyor belt and everything, and that would fix it. So obviously they didn't do that. So it wasn't self-checkout. That was a cover story. It's rising theft. And when people are in poverty, then theft increases, right? When the economy crumbles, theft increases. That's what's happening. That's what I think is happening at these Detroit locations. One, less income because less people are affording to eat there. They're probably going to the Dollar Tree to buy maybe a frozen hamburger. You go into the dollar store, you see the frozen food section in the back in some of them. Yeah, real good food. Almost as good as zombie cereal. All right, well, let's get into some other news here, folks. Layoffs coming in fast and furious. A paper mill will be shut down in Canton, Ohio. Wow, poor people in Ohio with everything going on there. Over 1,000 layoffs. What do they make here? What kind of paper products did they make? This is actually one other location too, 150 in a different location here. All right, so this website's got a pop up in my way. They want me to pay to read and see what they make. So it's a paper plant, so it's either cardboard boxes, paper plates, stuff like that. Interesting, right? So we're probably going to end up importing more from countries with a lower cost of living, and it's going to be just like it's been. We're going to see an increase in lost jobs here, factories closing. If you have good news, please let me know. If factories are opening up, I'd love to hear about it because I do searches very frequently on these types of things: openings, closings, layoffs, shutdowns, and I'm finding just way more shutdowns and closings than I am new factories opening, right? So again, please let me know down in the comments, what you see as far as good news. I would love to report on it here. But this looks like it's continuing, folks, and whether it's going to be a credit crunch where it's difficult to borrow money, or if the Fed's going to come in, bail everybody out, and make it easier for people to borrow money, because once the banks are nationalized, anything goes. They can really loosen the guidelines and say, we're helping people get loans. We're helping people get loans. We don't want the home prices to fall. We don't want the car prices to fall. So we have to give more people loans, and we have to lower the credit requirements to help people. That's what they're going to tell you. But ultimately, it's going to make the cost of living higher. It's going to make the cost of homes, vehicles higher if they do that. I'm not saying they're going to do that. I'm just saying anything goes. So prepare both ways. All right, now let's talk about more about some of the theories that some of the viewers here had. One of the theories is that the regulators, are going to let all the banks fail except for a few of the mega banks, right? The too big to fail banks. Well, we just had SVB get bought out. And it wasn't by one of the big mega banks, right? So people thought there was going to be a consolidation to all the mega banks. We've seen consolidation with people taking their deposits out of the smaller and regional banks. But the bank that went under, SVB, was bought out by First Citizens Bank. And First Citizens Bank got a $16.5 billion discount for taking over SVB. Why was that? Let's not call it a bailout, right? If you watch the business news networks, and they're not using the word bailout very often, are they? So they're just changing the words, hoping that you won't think that the same thing's happening that happened in 2008 where banks were bailed out. Well, you can call it what you want, but they're issuing a lot more debt than we used to, and things that were bad before are going to get worse because they're throwing gasoline on the fire. It's more of the same. They're keeping failed institutions propped up. They're reimbursing depositors that really should have known better to keep so much money in a bank. So you've got multi-billion-dollar corporations getting issued money backing that they really shouldn't have got. If they would have did their due diligence, they would have known that $250,000 was the cutoff, but they changed the rules to bail out the billionaires. The question is, will they bail out the little guy when it comes time? Or are we going to see millions more people lose their homes, millions of cars getting repossessed, a lot of more job losses, and then the people with the big money on the sideline are going to come in and scoop up things for pennies on the dollar? That is if they allow deflation. Does anybody know? I hope you know. Let me know down in the comments, because it's going to get even crazier. You haven't seen anything yet. Inflation, deflation, either way, there's no way out of this. It's going to be painless. It's going to be very, very difficult to navigate this, but I think we're going to make it, folks, because you know what's happening and you know how to prepare for both scenarios. Hard assets for the way up, hold cash for the way down. Always keep some out of the system in case your institution goes down, whether it's your crypto exchange, whether it's your bank. Right, you know the game, folks, so we're going to be on top of this for you. Thanks, everybody, for being here. Keep stacking. Bye for now. Peace.